Hello, my storage friends. Welcome to Storage Academy Live. My name is Tommy Nguyen. I'm your host, and I want to welcome you to the Alyssa Quill episode. With over 25 years of storage experience, she's done every job you can do in self-storage, and today she's the CEO and founder of Storage Asset Management with over 600 facilities under management. In today's episode, we break down data, how to find it, where to find it, what to do with it when you have it, and whether you're building a generational portfolio or leasing up your first storage facility. This is a fantastic episode to tune in. Welcome, come ready to learn, and I'll see you in the episode. Hey friends, Tommy here at StoragePug. Welcome to episode 7 of Storage Academy Live. I've got the one and only, really no intros needed, but Alyssa Quill, welcome to the stage, my friend. How you
Hey,
doing?
Tommy. Great. How are you?
I'm doing pretty awesome. Good summer so far, and glad to have you on. Thanks for honestly, I know you are extremely busy, so thank you for hanging out and spending time with us.
Oh, it's always fun to talk to you, Tommy, and
Yes.
I appreciate you inviting me.
Absolutely. Well, for those who may have only heard of the name, who is Alyssa Quill, the person?
Hey, I am a mom and a self-storage person like everybody else on this call. So I have worked in the self-storage industry for 25 years.
Oh my gosh.
For the last 16, I've been running a company that I started with a partner called Storage Asset Management. We are a third-party management company. So we manage about maybe 615 storage locations around the country. So I've done a little of everything in this industry, though. I've been on the finance side and the revenue management, operations, and now running a decent sized organization. I've made all the mistakes. I've learned from a lot of smart people along the way. So that's.
I love that. 3 things I love about what you just said. One, you're a mom. I'm a dad. We're parents. I love that. So that is who we are as people. I love that. Number 2, the little humble brag. You're not just a decent sized company. And I think that goes to show like you're so incredible to run a company with 615 facilities all across the U.S. and still spend time with our audience here, scores at Storage Academy Live. So I appreciate that. And then thirdly is 25 years in the industry. So you grew up in self storage, safe to say.
I did.
That's crazy. I honestly did not realize it had been 25 years. So
what's cool about that is people that I worked with in the first job. I worked for a company called Storage USA, which doesn't exist anymore. But all those people, nobody leaves storage.
No, of course.
So for 25 years, I've worked with people who are all in storage, but now maybe have spread out and are all these different companies, and
Yes.
still pick up the phone if I call and ask them questions. Or it's neat.
I love that.
It's an amazing industry.
The big family. Well, y'all, welcome. If this is your first time to Storage Academy Live, welcome. We're excited to have you. I see a lot of familiar names out here. Just heads up, this episode and all past episodes are published live on our YouTube channel and on podcasts. But today we're going to dig in, and we're going to dig into the data and why we chose Alyssa. When we were looking at different guests who could like speak to this, there were a couple attributes about the guest that we wanted. So number 1 is someone with tons of experience of actually digging into the weeds with the data. So 25 plus years of experience of doing all the different jobs of a storage business. That was a big check mark for Alyssa. And the second one is like someone whose opinion like we respect and like, someone whose words mean something. And again, double check for Alyssa. So we're going to dig in and talk about the data that actually matters. And probably for our operators here, and Alyssa, we're talking to a lot of the folks in our audience and who listen live and tune in. I think they would consider themselves kind of like the independent operator, right? Folks who own anywhere between 1 to 20 facilities. And of course, we've got some big names. We've got some folks who are, the big venture capital type groups in the audience as well. But our core audience are independent operators. And so I think the combination of what data actually, what actually matters, plus where to get it, right? So I'll start with the first question. What do you think sets operators apart, the folks who use data from those who don't? What are the biggest signs of how they operate and how they function, and even potentially how they present themselves? So, what's the difference between an operator who uses data to one who doesn't use data to run their storage business?
I think the biggest difference is speed.
Mm,
Um, I think when you have access to data and you actually use it, and we all have access to data, it's about whether or not we look at it and use it and do something with it. Um, when you're using it well, you can react to changes, to signs before the bad thing even happens or before the good thing even happens. And so you get there faster. So I can give a couple examples. One of, let's say, staffing, hire a new manager.
yes, yes.
And if you just kind of, okay, train them, I'm going to let them run and see how things go. And then a couple months later, you notice, oh man, I've lost a lot of occupancy. It's feeling soft. What's going on? If you're watching the data and watching your close rates, for instance, or watching the just daily activity, how many follow-up calls are we making? How many collection calls are we making? As soon as you start to see those close rates drop or the collection calls drop, you know before you have an AR problem or before you have an occupancy problem that you're going to. And so using that data to react faster. I mean, the same thing with we don't, the worst part of our business, but one of them, existing customer rate increases.
Hmm, hmm.
We're sending, every business raises rates from time to time. And if you don't watch what's happening, some of those people are going to move out. And depending on how you're doing it, if you don't watch what's happening, you might, again, wait till you've lost occupancy to notice that maybe you should change the way you're doing your existing customer rate increases. So using that data to react ahead of time. If I look at marketing from a marketing standpoint, I think the operators who are using data in a really great way are predicting what's going to happen if I don't change anything. If I don't change my prices, if I don't change my marketing, what do I expect to happen next month?
Mm.
And if I'm okay with that, great, I won't change anything. But if I can use the data to predict it and I don't like what it says, now I know I need to change something now to have the results I want next week or in 2 weeks. Um, so making the change before, proactively instead of reactively. Um, I, I so speed to react, I would say, is probably. And then the other thing, um, it's not just speed, but the likelihood of success of
I was
decisions
about
that
to
you
say,
make.
yeah, there's the end result of that speed.
Uh,
Yeah, you're hedging your bets a little bit better, probably. Uh,
yeah, so you can test something before you really roll it out and
that's
use
great.
that data to say, okay, I tested it a little bit. This is what I think is going to happen. I feel pretty comfortable with it because of the test and I'm moving forward. Or I can use the data to run a bunch of scenarios. If I do this and it goes wrong, what's the worst case? What's the best case? So really just using it to help you make smarter decisions, less likely to make a mistake.
Yeah, I really love that. The speed to reaction, the increased odds of success, or maybe fail faster, right? Like you may not be successful, but at least you chose to fail sooner, right?
Supposed to fail sooner, and you maybe did it on a smaller, you tested it on a smaller, on one property instead of your all five of your properties.
Yes, much more minimal impact.
Yeah.
Um, and I think the other thing that's probably a little harder to measure, but probably is still true is like the fear of unknown decreases a little bit, right? Or whatever that carries, the anxiety or the stress of just like not knowing what tomorrow's going to hold. If you're like on top of your data, you're less likely to have that feeling. You might still have fear and anxiety. Don't get me wrong, but the fear and anxiety of not knowing hopefully can be mitigated or
That's a
resolved. Yeah.
really good point, right? So if I'm an operator in, let's say in Charlotte, and I already have 3 properties in Charlotte, I want to buy a 4th property. If it's in Charlotte, I have data, my own data, for how that market reacts to different things and how saturated it is and what pricing can be. I feel more confident in that data. But if I'm going to buy a fourth property and it's in Maine, I live in Charlotte, all my other properties in Charlotte, it's a little riskier. Now I need to rely on other people's data, which might be great. I just have to find where to get it, but it's a little bit more, a little scarier.
Yeah. Well, we're all kind of just placing bets all every day anyways. Right? So you've already mentioned a few of these, which I love. So let's dig in a little bit. Like, what are the data points that operators should actually be paying to, right? The folks who are already running their storage businesses, what are the data points that matter the most? And maybe even dig into, like, are there even specific reports that you suggest every operator be looking into weekly, daily, monthly, that sort of thing?
Sure. I think when we talk about reports and storage, we often think about the reports that are in our operating system, which are very important, and I will talk about those. But more important than any of those is the profit and loss statement, I think, for a property. So, am I um, am I making money? Am I cash flowing? Can I pay the bills? If it's a lease up property, am I on a trajectory to get there? And do the expenses make sense relative to the revenue at this property? Is this the best investment? Is this the best? Am I managing the money the best way? So if I only had a minute to look at one report for a property, without a doubt, it would be the profit and loss statement first, like a trailing 12-month profit and loss statement. Um, but not, it's hard to just pick up a report and look at it. You have to have something to compare
Mm,
to as well. So for me, it's helpful if I'm looking at a property to know, okay, how are they doing now and how did they do at the same time of the year last year? Especially if it's not in lease up. But even if it's in lease up, so are the expenses? If I spent this much on utilities last year and I'm spending this much this year, does that make sense? So you either need a budget, a goal, or a historical same period number to compare to. I would say that's in any report, any metric. I need some sort of benchmark. So profit and loss statement. And then if I get into the more KPI focused reports, I would say a management history report would
mm,
be the second report I would look at. Something that's showing me the KPIs, the occupancy, the collections, the leads, close rates over a period of time. And so I could see how they're trending. Um, the third that I might look at would be like Google Analytics or some sort of report that shows me what's happening with demand and the lead activity and web hits. And because again, that's an indicating
yeah.
report, which is really important. Most of the other reports we're looking at tell me what happened last month or in the past. And that's a forward looking indicator. So profit and loss, management history, Google Analytics, and then I'd start getting into so a little more detail from the things on those. So the like rental activity. I have people moving in, I have people moving out. What's my average rate per square foot for the ones moving in compared to my in-place rates or the ones moving out? Because even if I'm net zero, if I'm losing on my rent roll every month, that's something I need to do something about. And then the occupied history, like did I for 3 years I've been full on 10 by 10s and now all of a sudden I have 30 10 by 10s open. I must have a pricing problem or what's going on? How do I fix
Mhm,
that?
mhm.
And then the last one that I'd say every operator should be paying attention to is maybe not necessarily a report that everybody has, but the reviews. So what's happening in my Google reviews? I guess now it's even more important what's happening in Yelp. What are people saying about me on the internet?
Mhm.
Uh, so I
Yeah.
would, those are probably the key ones I can think of. Are there any you can think of you to add?
I'm a huge fan of everything you just said. I think there's one that there's probably two that I hear from talking to operators, big and small. I think, like, it's related to the P&L. Is like, okay, breaking down the profit side, right? Of like what part is my rental income, what's part of my ancillary sales, what's part of are like one-time things like admin fees, lock charges, those kinds of things. And I think like the really savvy operators that I talk to break that down and think about it that way, right? Because they see what's my recurring revenue, and that's what they can quote unquote bank on, right?
Hmm.
And but then they also are savvy enough not to disregard the other stuff that is like admin fees. And so I see that, and then the other report that again, all in that P&L world is their net move-in activity. So what's the net, the plus or minus over a given time period? But I really want to unpack what you said because like it's the way you talk about it, you make it sound so easy and sound so logical, and maybe it is for some people in our audience, but maybe not for everyone. You talked about two concepts that I want to dig in a little bit. One is comparing period over period. Right? I think the comment you made was it's not, sure you have this expense line item, but like it doesn't really mean anything until I compare it to same period year over year or quarter over quarter, what have you.
Yeah.
That concept, which I think is really cool to unpack. And the other one is the trend version of that, right? Like, what's the trend line that looks like over a period of months or years? Because I think both of those are really cool to unpack and provide different levels of insight, right? So, how do you learn to do that? Well, first of all, and what are the different data points that you think should always be compared in a period over period perspective? And you mentioned expenses is a really good example. What are some of the other data points that are better to be looked at, not in a vacuum, but over a comparison?
All of them. I mean, yeah, so expenses are definitely one. Move-ins, I think it's really important. We have seasonality in our business, and at some properties and in some geographies more than others. And so I don't want to overreact. Maybe it's the first year we're managing a property, and they only have 15 move-ins in a month, and that seems really low when I
Right.
just look at it. But then when we look at what's happened at that property, and maybe it's a more rural market, the last 3 years they only had 10 move-ins. So actually they're having a great month. So
Woo. Yeah.
you have to have something to compare to look at. I think the sometimes you can take what's on the P&L and make a metric out of it. So when we look at admin fees or merchandise sales, retail
Mhm.
sales, for instance, that one might, I'm going to create a benchmark. So what percent how many dollars per move in did I sell? Because most of the people buying locks, boxes, tape are move ins. So we'll look at the dollars per move in and how's that changing and trending over time. So again, a dollar amount, $300, $400, that doesn't really mean much to me, but are we doing a good job of upselling that stuff to people who are renting with us, is important. I think, I mean, close rate is critical in
Mhm.
terms of trend. And so with a close rate, I want to keep getting better at every property, but also I know like if a close rate is 20% at one property and our average is 75%, I have to train that manager. It's a manager
Yes.
problem. They need training or they're just not in the right seat. And so that one wouldn't, I don't really care what it was last year. I care what it is compared to what our other properties are doing. So it's hard to, each metric, there might be a better benchmark than
Yeah.
another. So that can be a little bit tricky.
I love that though, but I think the root of that is like these data points in a vacuum don't mean a lot, right? Because I think, and at StoragePug we do work with a lot of brand new operators, like they just bought or built their first storage facility, and they're looking at data, and unfortunately for them, they may not have historical data to look at, right? And so they are, let's say they got a 15 rental month. And that's all. That's the only data they have. They don't have a previous August 2025 to compare to, right? And so they're feeling this heartburn. And so the encouragement I give people is like, yeah, data in a vacuum, if you only look at it that way, it will give you heartburn because you always want it to be better. A close rate of 75, I want 90, right? And so you always want it to be better, of course, but really to ground yourself and compare either period over period or store over store or store to benchmark, right? I love these ideas and concepts. And I think more people need to, I want more people to think about their data this way. um,
What's so cool about Storage Academy and other going to trade local and national trade shows is that in our industry people will share and they will talk. So if
yes.
you're new and you just built a property and you're leasing it up and you're wondering, okay, this feels good, it feels like we're doing a good job, but are we? I'm sure you could say, hey, would you guys mind sharing what your target is for close rates, or what your target is for lease up? What's normal? What's out there? What are you doing? And people in our industry are willing to share that.
Oh my gosh, yeah, I think they're so nice, self storage people, first of all. And I think like the heart of our business is because it's so local. Yeah, if if you're in York, Pennsylvania compared to Charlotte or wherever, it's not, you know what I mean? Like it doesn't, there's no secret sauce, if that makes sense.
Yeah, I
For the
know.
most
We
part.
all.
So that's cool. Well, is- so we've kind of established this baseline of the different data points that I think are important. We talked about, you brought the concept of comparing data, right? Year over year, trend lines, comparing it to benchmark, store by store. These are all different ways to like slice and dice the data. But like, where can I obtain industry data? You mentioned something very cool. Calling someone in a particular market, they might just open it up, right? And I think like that's cool. But are there other reliable places to pull either market or industry data that you would trust at
I
Sam?
mean, I think it's easier now than it has ever been before, thanks to
Mm.
my friend Claude, and other
Uncle Claude or
AI. Other, I mean,
yeah.
right, with AI
Oh my
now,
gosh.
you
Yeah.
can just go ask. I'm like, what are some very simple questions or prompts to say, hey, I'm trying to determine if my property is leasing up at a good speed, or if I have 65% of my tenants are signing up for auto pay. Is that good? Is that bad? Can other storage operators do better? And a, a lot of that type of data, the metrics like that, aren't released. Like the REITs don't publicly share what percent of their tenants sign up for their protection plan, or what percent of their tenants are on auto pay. But they talk
Mm.
about it sometimes, and there are transcripts out there that might catch it.
Yeah.
And I think the best way to try to find some of that is using an AI tool, to be honest with you right now. Now, they're going to put links in there to what they find. Click on those, read the article to help figure out, is this legitimate or not? Or, is it
Yes.
aggregating the right way? And keep reading and doing some research. But that's where I would start. I mean, if you set up and then ask friends, ask the company that's doing marketing for you, ask other operators, go to the Self Storage Association's website, see what data is there, read the magazines, you go to all, so the Storage Academy and different blogs, and join Facebook groups about storage, and you'll get that information. But AI is a great place to start.
Yeah. No, yeah, huge disclaimer, right? Of you gotta fact check the sources. And we're beyond less, it's less so hallucination at this point, and it's more so the way that the data is synthesized and then like re-communicated to the end user, right? It can jump to conclusions that may not exactly exist or be there, right? And so I do suggest people, just like Alyssa said, don't take what you get from Claude or ChatGPT or Gemini at face value. Ask it for its sources. And I love that. It's such a cheat code, because all of these public, especially when you're talking about the publicly traded companies, all of their quarterly earnings, there are transcripts out there freely available, by the way. And in the past, you'd have to read or listen to the call, listen to the call or read the transcript. Now you can just ask your favorite AI tool choice to not only summarize, but you can ask it to go find it for you, right? Like, and so it can cut all of that work down, and then now your job is to become a tea leaf reader extraordinaire, right?
Exactly.
To be
But
able
it
to
can
source
be,
it.
you don't have to even listen to, if you only are interested in one thing, it'll tell you in this call at minute 14, this topic was talked about. Here's the link, and you click on it, and it takes you right to minute
Yes.
14. It's
It's pretty
Takes a lot
wild.
of time.
Yeah, I'll share a specific way that I used that exact flow that you described. So earlier this year, we gave an AI conversation at the ski executive ski workshop in Aspen, and I wanted to know what the big REITs think about AI. And I, of course, we have first
Oh,
party sources. Like I called Guy, hey, what's up, Guy? And we talked to the folks in at the facilities, but or at the brand, but like because they're publicly traded, they can only say so much publicly without running by legal. But everything that's in the public transcripts from these quarterly earnings are out there, and it's are should already be vetted. And so we just ran analysis across I think the last 8 quarters, so like 2 years worth of earnings calls for each of these companies, and built a profile of their AI strategy that at least they're publicly talking about, right? And so that that was we were able to do that, and that literally took 12 minutes, right? Where that would have been a much bigger task, just
yeah.
2 years ago.
I
Um,
remember that actually. I was there. I got to see
oh,
your
you were there,
presentation.
so
Uh,
yeah.
yeah, I mean, I can even like I have a prompt that every 7 days I ask for it to search for news on the self storage industry, read earnings and guidance, mergers and
Mm,
acquisitions, new supply, occupancy trends. And then I ask, so that's group one. And then number two, I ask it, give me any news about specific self storage operators. And I name our biggest, as it were, third party management company. So I have our competitors in
of
there, right?
course, yes.
Um, and really any third party manager platform moves that are out there. So then it's telling me this is what's happening in your competitive environment. And then the third one um, is more useful for others on our team who are more local, but it's tell me if there's any state or legislation changes, or if there were any zoning notes related to self storage or tax
Mm,
changes or regulatory action in this county, this property where we have, this county or this city where we have, or the state where we have a property. So if I only had one property, this would be very easy because you'd have it. And I'm happy to even in the chat to share. Here's what that prompt looks like. It's simple. And then
l-
you look at it once a week, and you're up to
yeah.
date. You
Oh,
know what's going
Alyssa,
on.
that's really gold stuff right there. Share that and share that in the discussion boards if you
Oh,
can
good
as
idea. I'll
well.
just put it out there.
Yeah, I think that's incredible. So, for y'all who just joined us, I've got Alyssa Quill on today, the one and only. She's the CEO and founder of Storage Asset Management. They manage over 615 facilities, big and small, all across the U.S. And Alyssa grew up in the storage industry with 25 years of experience, and we're digging into data. So we're glad for all of our newcomers to join us. First time listeners, welcome. And of course, all of our tried and true folks, welcome back. But I love what you just broke down. I think the getting that 1, 2, 3 digest, whether it's weekly, some people do it daily, monthly, what have you. And then for the folks who have not broken the seal as far as like using these AI tools in this way yet, right? I definitely want to make speak to you all as well. Is really the simplest version of this is to go to Claude.ai, sign up for an account, copy and paste what Alyssa is going to share with you, and then you'll be able to set automated reminders and notifications, and then you can get even more advanced with it. It can text you, it can email you, it can pipe into your data flow wherever you have conversations like Slack or Microsoft Teams. So you can get really advanced with it. But the simplest version is you just type it in and it's going to give you an answer. But I think the big disclaimer that we talked about earlier is it is always smart to verify its sources. And you can simply ask it, hey, where did you find this information? Help me do it. Right. And so in that way, you're really using the AI agent or the AI tool as a search platform and not as a data analysis platform, if that makes sense. Right. And I think that's a big distinction. And I think for especially when you're talking about like private data and that sort of thing, we don't we're not going to get into that in this conversation, but using it as a search tool, as a curator of information, I think what you described there, that 1, 2, 3 prompt, is incredible, and I hope more people are going to tap into that. So we're in this conversation now of like finding industry data. You mentioned some really good places. Use the AI tool to find it. Listen to the public transcripts. Go to your self storage association. Listen to listen to different webinars. Check out the magazines. I love all of that. So when you get it all this back, right? How do you like decide what is good and what's not good? How do you decide the noise versus the stuff that actually matters, if that makes sense? Obviously, 25 years of experience, your BS meter has probably gotten really good, and you can help filter out the noise. But like, how do you, what advice you have for someone who's like really just getting into it now, and they're feeling overwhelmed with all of this data that's available to them?
Um, Again, self storage is a very local business. Um, and so if you have a handful of properties, if there's data that the industry's oversaturated and the demand's going down and stuff, but that's not what you're feeling and what you're seeing in your market, ignore
Mm,
it. Pay attention to what's happening in your market. Pay attention to the new build down the street because that's going to impact you. You're going to have to be prepared for that, and you're going to have to, make sure you're putting your best foot forward and your property looks the best that it can and you're presented well online and you've got the right prices and your occupancy is as full as it can be before they open. Um, but just keep it focused on your properties, I would say, and what's happening at your properties in your markets. So that's what matters the most to you. The other data that's out there that's not necessarily storage data, but you might want to track a little bit. If you need to refinance in a couple of years, you might,
mm.
want to be thinking a couple of years ahead. Um, like if this happens with interest rates or that happens with interest rates, what are my options? And just be planning just in case. And what should I do using the data I have? What should I, and we can talk more about that, I think, in a little bit, but what should I be doing with the data to prepare myself for that thing that I want to happen in a couple of years?
Yeah.
So we can talk about that. So, but I think, yeah, just if it's not impacting your property, don't worry about it. And you don't think it will, just ignore it.
You heard it here first. Just ignore it. I love that, but I hope people hear that and believe it, because I do think like when you hear these big scary reports of demand, softening or rates dropping and all these kinds of things, REITs coming in and doing bait and switch strategies and all of these things, and especially now that self storage has quote unquote grown up, right? We get talked about in the Wall Street Journal and Bloomberg, and you know what I mean. So like 8 years ago that wasn't happening, you know what I mean? Like we weren't that kind of industry yet, but now we've matured, and so the public and the news and the media, we're talked about now, and so it feels like it's more impactful than it probably really is. If you are a facility in Knoxville, Tennessee, or Charlotte, what's happening in Tempe or Sacramento may not really matter. It doesn't matter that Extra Space is doing X, Y, or Z in New York City, right? Like it could be, you know what I mean? Obviously, there are big things that could happen, but like, yes, listen to what's happening locally. I think that's really
Yeah.
important.
I mean, and if you listen to the big things that could happen, I guess what my advice would be is really think about, is there anything you can do to impact that? I mean, maybe if you're a fair, honest business operator, um, that's what we need all storage operators to be, right? To protect the reputation of our industry, protect us legislatively. Let's be fair, honest, and successful at the same
Of
time.
course.
Then you're doing the best that you can for our industry, and your property will perform well. And just focus on that. What you can do
Yeah.
first.
I think the businesses that do right by people, the money takes care of itself for the most part, right? As long as you chose an industry that is supportive of of an enterprise. And I think self storage has proven that, like from a capitalistic point of view, it is a money making machine if it ran well. But ultimately, if you take care of the people, the money part kind of figures itself out. Or at
Yeah,
least
I
you hope so.
agree.
And I love what you said there. I think as an industry, we all get to make that choice, right? Of take care of our tenants, take care of our employees, take care of our investors and whatnot. And so I love this. So let's talk about putting that data to work, right? So you've gathered all these sources. You're using AI. You're using magazines. You're listening to experts. You're calling competitors. Like you've gathered all of these data, and wherever and however you've done so, let's talk through like some of these goals you talked about. I love, like, we can start with the refinance piece, right? Like if your goal in the next handful of months or years is to refinance because that's part of your overall business strategy, what data matters in that scenario. And I'll give you the other scenarios so you can just talk for as long as you want on this. Refinance scenario, you want to grow and expand your business, you want to buy or sell additional facilities. Like in all of these different business scenarios and goals, what are the data points that are going to matter the most as you're digging into and making these plans?
Sure. Yeah, I'll start talking through some. If I miss some, remind me. And
Yes. Yep.
but so refinance, you mentioned first. I think probably in a refinance situation, the most important thing is a strong, clean, trailing 12 months NOI whenever you're
Mm,
ready. So if I know in a year I have to refinance, what I want to do over the next year is um, make sure I have like a stable expense, stable revenue, stable expenses, or maybe kind of continuing to grow. If I have some one-time expenses, I want to make sure I'm calling those out, like, and so that I can tell an underwriter, here's our trailing 12 months. You'll see in this month there was this bigger expense, but it was, an improvement we made on the property, to make it uh, more successful in the future or whatever it is. So you can explain it. I would say for mature property and expense ratios, they're usually between 30 and 40%. So the total operating expenses divided by the gross profit, the income collected at a property. And so if you're running way off of that, it's a really good time a year before to start cleaning that up and figure out how to get your expense ratio steady. And so some things you look at, if my expense ratio is high, maybe my utilities are high, maybe it's an old property I bought, and if I do an upgrade of the lighting fixtures to LED, I can
mm,
really, it's a one-time expense, capital improvement, but I'm going to hold this property for a while and I'm going to really drop my utility costs long term. And repairs and maintenance costs long term. So then my operating expenses decrease long term, and that helps. Um, Maybe I can change my office hours a little bit. Maybe I can. There are providers out there where I can have an AI agent for the phone to answer simple things. So then I don't need someone answering the phone as much. I still need a person, but they're keeping they're improving the customer experience in ways that are also important, but really need more of a touch. Um, Landscaping, maybe, this thing sounds simple, but maybe I can switch mulch with river rock and I don't have to do it every year. Maybe I can buy a robot lawnmower, and I
yes.
don't have this as I don't have to spend as much on a landscaping vendor. So if I'm refinancing or even selling, I'm looking at all those things. If I It's NOI focused. if if I'm looking to hold my property for generations, like I want this to, or properties, I want it to fund my kids' education years from now, I
Yes.
might be less worried about the expense ratio today and more worried about a really quality building and product and asphalt and, just maintaining the quality of that property for a long time. If I want to grow, lease up, I'm thinking about doing an expansion or adding building across the street or buying another property or then the metrics I'm looking at are much more revenue focused. So
Mm,
they are, website volume, lead volume. How are my Google ads doing? Am I pushing leads, as many leads to the site? Are my close rates really strong? Is there anything I can do to improve my close rates? Um, is my watching my actual occupied rent, so my rent roll, how is that growing? Am I optimizing the asking rates at a point in time? Can I, instead of dropping my rates, can I offer one-time promotions that'll help? So much more revenue focused in a lease up or, um, you know, with a new one. If I'm buying, um, this is where finding some other like competitive information is really helpful. So I'm going to get the history of that
mhm,
property,
mhm.
which hopefully I have a good way to audit. Like, I can compare against bank statements or something to make sure it's actual. But then I really want to know how's that market doing. So I can do my own just searching and shopping the market online and pulling rates. There are certainly services like, we outsource rate scraping data that we get pumped into our revenue management model every day. But it's really helpful. Even if you go look now, I think using some of those sources to be able to run a report to show me what's happened the last 12 months with rates in this market is pretty important if I'm looking at buying in a market I don't operate in
Absolutely.
already.
Yeah.
So that'd be something else I'd look at. I mean, that if I'm looking to buy, really understanding taxes, millage rates, and how properties are assessed in a new market, to me, gathering that information is pretty critical because that can make or break it. Property insurance costs, having a really good broker or agent that I can go to and say, I'm thinking about buying in this market. Can you help me understand what that cost is going to be? Because again, that can make or break the success of an acquisition as well. Did I miss any scenarios?
Oh, you talked about the refinancing piece, the growing. I loved, by the way, because I think those are our people. The hold it forever kind of crowd, right? That like, let me take care of my kids and my kids' kids and my kids' kids' kids. Those are the people, right? Because they're one, they're salt of the earth kind of people, anyways. But then two, like they take a lot of pride in their business. You know what I mean? They're the ones whose
Yeah,
lawn look the crispiest, right?
we
The gr-
do.
the
If,
grass is the greenest,
if
and
you
yeah, they just
if you
care.
ask anyone on our team, um, if they could like design a perfect client who'd hire us to manage their property for them, those are the ones that they
Yeah,
care. And they still, we need to perform really well for them and we want to perform
absolutely,
really well for them.
absolutely.
But they they aren't afraid to put the money into the property to maintain it really well, which makes our jobs a lot easier. It's easier to continue to grow revenue and push rates in a property that looks fantastic. And
Yeah.
the manager, as a manager, working at a property, it's a lot more motivating to manage a property that you're proud of.
Oh my gosh. And
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 looks great.
and that you're well cared for, you
Yep.
know? Like the investor, the owner, or the family who owns that piece of investment, like they care for the people who work there and interact there, right? And so yeah, they probably are paid better. They may even have benefits, and at minimum, they're like treated with respect. You know, not to say that other people don't. Don't get me wrong. I'm just saying it's just way more likely that a hold it and generational kind of mindset person they want to take care of, because yeah, ultimately this manager who's running the storage business, they have the most say in the success of the storage business.
They, yeah, I mean, they're more willing to invest in someone who's going to treat it like they own it,
Yes. Yeah.
run it like they own it. So
Yeah.
without
So
a doubt.
yeah, so I think the Sam and the Pug ideal customer profile has a lot of concentric circles, because those are our favorite people, and I see people in this room who are part of the Pug Pack who fall in that category. And yeah, to me, those are the best people to work with. Not to say that other people aren't, but we love we love y'all for that. So this is incredible. So thank you for coming to the table with real examples, with real stats, and I think like you and I could probably dig in deep into any of those if we wanted to, and spend 2 hours for each of those,
Yeah.
of how to grow your business and how to run your business and how to expand and refinance and all that kind of stuff. But let's spend the remaining time together talking about trends, and ultimately I think you've already made the awesome distinction of, just because it's a big national thing does not necessarily mean it's going to impact you, and in fact you might actually can choose to ignore it, as long as you're also paying attention to the local trends, right? So dig into the local trends a little bit deeper. You mentioned y'all use scraping tools to get rates, competitive rates amongst local markets. Obviously, you also mentioned using AI tools to help do some of this work. What are other ways that, as an operator, you can identify local trends that may be things that people aren't thinking about today, or maybe they're not using to the best of their capabilities?
To identify local trends. I mean, there's definitely data out there. So there are a lot of good operators. So I'll mention some that we work
Yes.
with,
Hmm.
and we like and trust, but it doesn't mean they're the only ones either. So I don't want to offend anybody just because this is who we work with. But um, like Store Track is a
Hmm.
company that this is their whole business, and so if they don't do the best job getting accurate data and presenting it accurately, their business will fail.
Mm.
So I think companies like that, who this is their whole business, I tend to trust them a little bit more. So um, So they track in a market like what's happening in the development pipeline, what's happened with rate trends over history, what's the how many square feet per capita are there, how many storage units per household are there, and so using a tool like theirs, and I think you can subscribe to it or you can just pay for one time for a report, or you used to be able to at least. I don't use it that way anymore, so hopefully that's still the case. But there are other providers of that data. I think that really helps because we can pull it nationally and for all our properties, but you can just go pull it for one property or one market as well. So, and when we look at that now in terms of trends, and Yardi does a good job of sharing development and data, the economic data that impacts our business as well. So when we gather some of that data and really look at what's happening, properties under construction, I would say this is the trend that I'm the most excited about for our industry. Well, for operators who already have a property, is there's still development happening, but it seems like people are getting smarter about where they're doing it and when they're doing it, and so we're seeing less of the not doing a feasibility study. I'm just going to develop and develop and develop, and so that the number of properties getting built as a percent of our market decreasing over the next 2 years at least. And there's a pretty long lead time on those. So it's a good indicator, which I'm excited about. Right. If we look at just our portfolio, 56% of the properties we manage had a new development open in the last 12 months, but
Wow.
only 31% will have a new property open in their market in the next 12 months. So that's a positive trend.
Should get easier. Yeah.
Still not easy
No,
necessarily,
no,
but
no.
easier. But
Yes.
and then
Wow. So more than half of your facilities are competing with lease ups. Um,
yeah,
that's what. That's tough.
keeps us on our toes. We've got to
That's
be really smart and got to be paying attention to the data
yes.
and the actions and what's happening.
Wow. Yeah. But I love that. I mean, that's a really cool way to punctuate because I think uh honestly, myself included, tracking new development is not necessarily something that we I don't say care. I don't say care is a strong word, but it's not something we pay attention to at StoragePug, right? So I thank you for bringing that to the table because now that brings another layer of like of richness when we're having a conversation with someone who is potentially struggling or maybe someone who is going against someone who is in a lease up. I think being able to forecast like actually it's hard right now. It will either get harder or hopefully get easier.
So that's what
Yeah.
happens, right? So if demand doesn't change, and I know I have a competitor opening in 3 months across the street from me,
Yes.
and I know in our market, um, there are 200 people who are going to need search and need storage in the month of November. And right now, I'm only competing with 3 other operators for it.
Yes.
So 200 divided by 4, we're each going to get 50 leads if it's even. Well, now we're throwing another one in. We're not going to get as many leads. So you know what that means? I need to do something to get a bigger piece of the pie reaching out to me or looking at me or seeing me. So I need to show up for more searches starting in November
Yeah.
than I do today. What am I going
Incredible.
to do to do that? How do I prepare for that ahead of time? Otherwise, I'm going to start losing some occupancy because I'm just not going to get as many leads because I'm
Yeah.
sharing them. So
What a smart. I mean, yeah, you price of admission right there. I think I hope people take that because I made a note internally here because I think that's such an incredible, insightful piece of way to look at this data. And I think you mentioned Yardi Matrix as one of the places to find development data. Is that the primary source, or are there other places to find local development data?
I mean, you could just do searching for zoning notes in your area, and you can try again using one of those AI agents to do it. That I know StoreTrack tracks all of that. I think Radius Plus probably tracks all
Hmm.
of that.
Yeah.
I'm sure there are probably some others, but there are quite a few out there.
Awesome. Yeah. Well, good deal. I dropped Store Track in the comments. I also put in Yardi, and I'll drop in Radius Plus since you mentioned all of these brands to get these folks exposed to the audience. So storage looks different today in 2026 than it did in I'm gonna do the math, 2001 when you entered our scene, right?
Yeah.
Uh, right now, though, uh, talk to me like what you're observing. One you already mentioned, the slowdown of new development. It's not like we just turned off the valve, but at least it's not like it was maybe the last handful of years. I think that post-COVID gap, everyone decided let's go finish our projects, and I think the other trend that you talked briefly about is the wild wild west way of building a storage business, which is like no feasibility studies. People just, oh, my cousin Bob did it, I can do it too. Right. I think a lot of that is being phased out or being completed, I guess I should say. What are other trends? What are other things that you're noticing or that you're observing or that you're watching heading into the end of this year and even into next year?
Um, and some that are nice. The customers, tenants haven't changed much. They're still using us for the same reasons. They still come from typically like a 3 mile ring. I think we have over the last 5 years, they come from slightly closer. So they're not driving quite as far, but I think that's more of a metric, more of a matter of there are more competitors now. But in general, they're still staying quite a while. They're very long, actually, and they're still using us for the same reasons, which is great. Um, we are geographically like kind of the Sun Belt properties. There was more development there, so those properties are struggling a little more than others. The Northeast Mid Atlantic has been doing great for us this year. Lease ups are happening a lot faster. So we looked at our lease ups that opened in 2024, and they rented an average of net 2,500 square feet a month incremental. Like they grew their occupancy for their first year. In 2025, our lease ups rented 2,800 a month in their first year square feet. In 2026, our lease ups have rented 4,800 square feet a
Whoa.
month. So our properties are leasing up much faster this year. Now, it's a function of multiple things. One, I think demand is up a little bit. Number two, we are using data in a smarter way, and we're spending our money to advertise and get in front of those customers in a much smarter way. And so we're driving more leads to our properties than we did in the past. And number three, our team keeps getting better and better at sales and close rates and training.
Yeah.
And there's a sticker, you guys can't see it because I'm on my computer, but there's a sticker right here. In my very first job in storage, our COO at the time was a guy named Carl Haas, and he ingrained into our heads the answer is it's the manager. And so when there's no other answer for why a property is performing really well or really poorly, that's the answer. It's the manager. So
It's the
we've
manager.
invested in managers and hiring the right managers for those lease up sites, I think. Otherwise, I think demand's tricky to right now to
Mhm.
tell exactly what it is. To us, it seems pretty similar to the last couple of years, but a little bit better. And we are using data. For years, we used Google Index for demand, which we still look at, but it's a little harder now because people are using AI and AI searches in a different way. There are these
Mhm.
long search terms. So I think right now it's a little tricky to know how how demand and searching for self storage has changed over the last couple of years. So hopefully we'll get cleaner data to help. But I think AI is helping us be smarter in many ways, including using machine learning to through Google or ad placement to say what's the best time of the day for my ads to show up, where should I show up, what's the
Yeah.
geography I should show up in. So again, being using the tools that are out there to help frame your decisions in a better way.
No.
So I think uh, I think it'll continue to be. We'll still have to work hard to do well. It's not getting easy, um, but I think we'll continue to see slow improvement
Yeah.
overall in the industry nationwide over time.
Yeah. So still bullish. We still believe in this thing, this storage train.
without a doubt. Still a great industry. Still a great industry. And it's always performed well. Just we had some incredible years
Incredible
that
golden years. Yeah. I think the thing I want to punctuate is the very first thing you said, which is the reasons for storing hasn't changed, right? So like the variable of customer acquisition, that's one of the biggest variables of customer acquisition is like, why do people need our product? What role in society, what role in someone's life cycle, what role in someone's, journey do we play? And for self storage, that, whether it's 2001 or 2026, that hasn't changed too greatly. I think you can add a few other things to it, like, urban markets. There's more, people who live in big urban areas, or maybe roommates kind of situation, and that's great for storage, obviously, right? Because they still have stuff they want to store, right? That is probably a newer trend compared to 2001, but ultimately, the 7Ds or the 15Ds or whatever still applies, and still storage still plays a transition role in people's lives, right? So like that variable is not variable, which is awesome. And I think the other comments you made there, like demand still soft, but maybe a little stronger this year. I do have a question about that. So in especially for lease up. So in 2023, when we had you on, we asked you the question of like, how long should I expect to lease up a facility? You gave a 2023 answer. What is the 2026 version of this question? How long should I expect the lease up to happen if I'm brand new, opening 0% occupied today?
I mean, we're still underwriting properties at 3 years. Well, I shouldn't say still. Right now, we're underwriting properties at 3 years.
Mhm.
Um, but our data this year we've been running a little faster than what we underwrote at. But I think 3 years, 2.5, two and a half to get their occupancy wise, and then you need another 6 months to kind of, or even a year to catch the rates up if you're in a market. I mean, the one thing we didn't talk about, and I know we're almost out of time, is public storage buying NSA. I think
Yes.
that is something that people, if you're in a market where you competed with an iStorage before, and now you're competing with a public storage and they weren't there before, I'd watch closely what happens with rates. They're going to try to get the occupancy up at those properties. Um, and so you just want to be aware of what's happening so you can react quickly if you need to.
Oh, I think that's real. Knoxville, my Knoxville folks, y'all one of them. Public Storage had their first Knoxville facility open in East Knoxville earlier this year, and now there's quite a few iStorages that I've already seen the rebrand happening. So they've moved pretty quickly since that acquisition. So yeah, Public Storage is now in Knoxville to go toe to toe with about 20 extra spaces. And I can't remember the last count of CubeSmarts, but you're totally right. I think being exposed to now the REITs now being having visibility into tertiary markets is going to potentially flip things upside down for some operators. So it's an important trend to keep an eye out for.
Yep.
So question of the week here that Darby spotlighted is if you, because we talked about so many things today, but if you could choose one data point to tell folks they can ignore completely, what would it be?
I personally can't stand the metric gross potential income or gross potential rate and rent. People, it's very important to some people. But to me, I can make it whatever you want. It's a fake number. It's just like what I think is the most I could rent my property for right now. If you want it to be high, I'll make it high, and then I'll just slash rates 30% or 40% for move-ins. But it's not real. So I think I would say gross potential income or gross potential rent, or
Or
people call it
economic
different things.
occupancy is yeah.
And yeah, exactly. That's the denominator in economic occupancy. So I can make that whatever you want it too. Easy
Yeah.
peasy. It doesn't mean my property's performing any better.
I think
So
the audience agrees. Hint, hint. We got some amens in the crowd.
oh, I see Steven there. Hey, Steven.
What's up, Steven? No, I hear you loud and clear on that. I think a lot of we get a lot. Fortunately, self storage is not a guru energy kind of industry. Compare, I've got friends in multifamily and other kinds of real estate, and there's definitely some guru energy, and they'll sell you a course. We don't have a lot of that, fortunately, in our industry, but there are some smart people who speak very highly of some of these metrics, and I always throw a little question mark, like, you can make that look however you want, right? And especially in your world where you're you're, even if you're not a third party manager, even if it is you're just reporting to your own shareholders, it just feels not fully honest, right? If that's the leading metric, and even if you're not trying to be shisty, you're missing a lot of the picture, right? And
You
that's
have to understand. So they report their gross potential income as this, but then do they slash rates on top of that? What does that? How does that compare to their move-in rate? Right? Like you just have to understand how
yeah.
different operators use it.
Yeah, exactly. So, well, Alyssa, you are absolutely incredible, my friend. Thank you for hanging out with us today.
It's been
You're
fun.
you're
Thanks for having
so
me.
yeah. We need to have you on at least once a year now. We'll add you to the John Chang rotation. So we get John to come out once a year. He does an industry trend report from Marcus Millichap, and
Speaking
uh,
about another place to get industry data, that's a
there
great
we
point. And
yes.
he's brilliant.
Uh,
Yeah,
so we need the annual Alyssa Quill episode, and we'll just
I'm
call it the Alyssa
available.
Quill episode. So,
Sounds
uh,
good.
thank you, my friend. Well, where can people find you out in the wild? I know we're about to enter the
Yeah.
fall trade show circuit. So, where are you going to actually be? And then, if people want to just connect with you to talk about third party management, self storage, anything, um, where can people find you?
I'll be in Vegas for the SSA show in 2 weeks, and my email is aquill, Quill, at storageasset.com. So it'd be great to hear from anybody. Or
Awesome.
stop me. It'd be good to see you in Vegas if you're there.
Yes, very approachable and very kind human.
I'll
So
definitely see you there, Tommy. Right?
yes,
Okay.
yes, yeah, we'll be there. Our crew gets there. I think I land somewhere on that Tuesday, and then we're there through Friday. So very much looking forward to it, y'all. Like I said, if this was your first Storage Academy live episode, honestly, you chose a really good one because Alyssa is incredible. But this recording, we'll send it out via email. We upload it every episode to our StoragePug YouTube channel, and we also post it in Storage Academy Live. The podcast edition will be released next Thursday, so you can listen to Alyssa while you are working out. And of course, our next session will be live on September 24th. We're bringing one of our awesome independent operators that fit that little circle that's Alyssa and I were talking about, Michael Morrison from Superior Capital Advisors over in South Carolina. We're going to talk about how you set big goals and how you grow your storage portfolio from one to as big as you want. So,
Awesome.
y'all, thank you for hanging out with us today. And Alyssa, thank you for all your time. Appreciate you, man.
Thank you. Bye,
Yep.
guys.
Bye, y'all.